So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and today I'm joined by Damion Lupo. Damion is the best-selling author of 12 books on personal finance, hosts the Financial Underdogs podcast, and has owned more than 60 companies. Today, he's the chief honey badger at EQRP Co. and lead architect of the EQRP, the Ferrari of 401ks. The EQRP is a unique and powerful system to put individuals in command of their investments, providing a way to invest in hard assets like real estate, gold, and private equity using retirement funds. Damion, welcome to the show.
Jonny, it's good to be here. Thanks for having me.
Absolutely. A lot to get to. I'm excited. Chief Honey Badger. Love that. Let's start at the beginning. I'm going to make a bold assumption here, but correct me if I'm wrong. Feels like you're probably a serial entrepreneur from the start, but take us back. You know, what got you into entrepreneurship and all that?
It's funny. I think I did the same thing back when I was 11 that Elon Musk did today when he's trying to buy Twitter. He just got really irritated with the problem of censorship. And so he said, okay, well, I can do something about it. I did the same thing at 11, not with Twitter, because obviously Twitter wasn't around. But back when I was 11, my parents told me we were broke and we couldn't afford really anything. And so I said, I don't buy that. And I wanted to buy video games. I was just, a kid wanting to solve a problem. And so what I ended up doing was hiring my parents to drive me around when I was 11 to buy and sell Nintendo games. And that was really the first venture into a business, a wholesale retail type of business. And from there, it kept going where I saw problems and I went and solved them. And that's what entrepreneurs do. And we can't help it. Everywhere we go, we're looking at what's the problem? What's the opportunity? Can I create a business here? Like it's impossible to stop. Our brain just is wired that way.
Absolutely. I couldn't agree more. And the more you do it, the more problems you see, but also ultimately the more solutions you can come up with. So give us just kind of a quick Reader's Digest version of some of them, and then we'll get into EQRP.
Yeah. So back in the early 2000s, I had started an insurance agency. And what's funny is being at that age, around 20, I thought, oh, this is not nearly big enough, because the guys that were making the most money were making $1 million a year in insurance. And I said, that's just not enough. I read one of Donald Trump's books, and I was like, hey, $1 billion sounds like better than $1 million. So I basically got rid of the insurance agency, sold it for about 20 grand, which, it's not a big exit. That's kind of like you basically just started, but you have a book of business, sold it, started doing some real estate stuff based on an infomercial and Rich Dad Poor Dad. And from there, about 150 houses over 5 years, started with my credit card to buy the first one, literally took a cash advance on a card and went out and did what the guru said to do and just stumbled my way into a lot of success, a lot of money, became a multimillionaire in my early 20s. And 2008, I thought I was 10 feet tall and bulletproof. And so I had 7 projects that were each supposed to make me $1 million. And within a year, every one of those things lost more than $1 million. And so I went from a $20 million portfolio to a negative $5 million. So I basically lost $25 million in 12 months and had to start over. And that's when the reinvention, reimagination, and redo happened back in the about 10 years ago. Wow.
That's incredible. That's quite the humbling experience, as I can imagine. Okay. So you obviously learned a lot. From those lessons you learned, what kind of transpired after that?
Well, one of the things that I realized in all that, one, I spent 2 years living on a river called Denial, and I sat there just pretending it didn't happen. And then when I got to the other side of that, there's a shift into a place called responsibility. And that was where I said, okay, this was my fault. Everything was my fault. Because what I really learned there was that if I'm lying to myself and saying, well, it was Obama or Bush or the economy or Ben Bernanke or whatever, or it's Wall Street, if it's somebody else's fault, I can't actually change anything. I'm just waiting for the next victim moment. So the shift was me owning it and then saying, okay, if I'm going to go do something, what am I going to do? Am I going to do the same thing and just learn how to do it better? Or am I going to really do something that impacts other people? And the original thing that I think a lot of people also do is they're trying to figure out how to make money. And money is a great side effect, but it's a terrible focus. So I shifted and asked, how can I serve more people? And instead of just asking for more money, I asked, how can I create more impact? And that's where what I'm doing now came to be. It was a question of, what can I do that matters? And at the end of my life, am I going to say, gosh, I just didn't go for it? Or am I going to, I mean, that came up because my dad got really sick about 8 years ago. And I went and met with him a few weeks before he died. And one of I remember this conversation. We were sitting there and he looked at me and he goes, there were just so many things that I wanted to do. And I saw regret. I saw a guy that was out of time. And I thought, I don't want to ever be that way. And so there was a shift into what's my potential and who am I? And the shift was into realizing I'm a teacher, and not a teacher from the ivory tower that has never done anything. But my job is to be a teacher based on things I've done, which I think is a lot more credible than people that just teach what they read in a book or what somebody else told them. Like, I've been out there and bled. That's why I'm so bald, because I've gone out there and I earned the scar tissue. And that's really what the transformation was. It was taking everything I'd learned through the experience and then saying, okay, I can teach other people and empower them with the truth versus all the nonsense that's out there confusing everyone.
Yeah, it makes perfect sense. And really a lot of great points right there, especially the regret thing. I know a lot of entrepreneurs can really speak to that because, listen, if you fall on your butt, at least you can say you try to get back up and you do the next thing. So let's kind of get into EQRP now. I know this is really it's starting to come more to light in terms of, using retirement accounts for alternative investments. When I was a broker, I worked with a lot of high net worth individuals. A few of them were putting alternative investments into their retirement accounts, but it feels like it's been the last probably 5 years or so that it's really become prevalent. So kind of, talk about how that came to be. It sounds like you probably saw a problem or under education and kind of go from there.
Yeah, what I saw in the marketplace was there was two things that were happening. People have retirement accounts and they think that they're only able to really put in paper assets, which is, stocks, bonds, mutual funds. And so that was the first problem. Most of America thinks that's their only option. And then the other thing where people realized they actually could do the alternatives. And I always laugh, like the main street or the mainstream traditional is the stocks. And I'm like, well, that's actually a derivative of a company. And
Right.
what's real is like real estate or gold. Like that's real. So we've definitely confused the languaging. People are like, wait, what's real? What's alternative? So I just said, okay, there's in the market, we're seeing people using IRAs for other stuff that's not Wall Street. Well, that's interesting. The problem is, and this actually really this changed last November of 2021 when the courts ruled that IRAs can't do what they had been doing. But basically people were investing in real estate for the most part in IRAs, and they were doing it and they were being taxed and they didn't even realize this was coming. And so that's the gap I saw. People didn't actually have control because there's a custodian, and they were being taxed on real estate because real estate started selling. And then all of a sudden they're getting these giant tax bills from UBIT tax. And so I was watching all this going on and I started digging into the tax code, and I said, there's got to be something better. And that's when the EQRP came into existence and started sharing that. And at first people thought, this is crazy. This must be fake. It's like fake news a decade ago. Because they're like, there's no way this could be this good and be real. Why haven't I heard about it? And I was like, well, here's their answer, because Wall Street doesn't want to tell you how to take its assets and pull them away so that they lose their AUM. They're going to tell you that you're too stupid and you should keep the assets with them and then just go away and let them feed on you. And so the EQRP ended up becoming this tool for individuals and businesses. I mean, people don't realize, because we're the only ones in the country that do it. You can have a company and you can have hundreds of employees and everybody can have self-directed control of their stuff, not to buy stocks, but like every employee and the owners can actually control and invest in real estate. But nobody wants to set those up because they're incredibly complicated. And so we do all the heavy lifting and then people actually get to control. And all of a sudden, like the whole universe of investing opens up, and Wall Street hates it, but our clients love it. And so, that makes me happy. And it's a great place to be, where I'm actually serving people and a lot of people are getting value. And like you said, it's coming to light. More and more people know that this is an option, and it's not being buried by Wall Street anymore.
Awesome. I love that. So true, in terms of, like I said, people not understanding, but you mentioned it's the only one in the country that does it. So explain the difference between just, a regular custodian who allows you to do all your self-direction and you guys.
Well, so a custodian is really set up for IRAs. And so these are individuals, and you have quasi control. You can tell the custodian what you want to do. The courts ruled that you cannot have command of assets. So like the checkbook IRAs are no longer even legal. You cannot have those per the tax court ruling back in November. So right now you basically have a custodian that you have to get permission to do stuff. I mean, you can go do it, but then they're basically getting in the way. And sometimes it takes 4 to 6 weeks. If you actually look at Charles Schwab, who is a custodian of IRAs, and they do self-directed IRAs, if you look at their stuff, it'll say, send us what you want to do, and we'll let you know if we're going to allow it in 4 to 6 weeks. Like in this market, you can't wait 4 to 6 weeks. No. The deal's gone. Right. So whatever deal it is, like the stock has already gone away, or the apartment syndication or whatever you're trying to do is over. You got to be able to do things in hours or days. So what the EQRP gives you is actual command and control, because you're the trustee. You get to direct things. You get to wire money. You get to choose your investments. You can take physical possession of gold, silver, crypto. All these things you cannot do with IRAs. You can't take possession of those. You can't control and command them. And so the difference is you actually have control and you don't get taxed. So if you buy real estate with an EQRP and there's debt, there's no UBIT tax. You do that with an IRA. Like a lot of people have self-directed IRAs. They've invested in apartments or houses they're flipping or whatever. And every time those things exit and there's a net profit over $1,000, there's UBIT tax. And people don't realize that's coming. And we've had some people that, I mean, one guy showed up and he said, 60 days ago, I had an exit and I'm paying $400,000 in UBIT tax because I used my self-directed IRA. And I said, if you would have called us 65 days ago, we would have had that tax bill at zero. And it was simply using the right vehicle, but people don't know because the custodians aren't telling them.
Okay. So a couple questions. One, real quick, just explain what UBIT is, just in case.
Yeah. UBIT is the unrelated business income tax. And it's this tax for like tax exempt vehicles like retirement accounts and certain trusts. And it gets triggered in a couple of different ways. The one that it gets triggered by specifically that we're talking about is UDFI, unrelated debt financed income. So if you've got an apartment and then there's debt, part of your profit is coming from the capital, the debt capital, and then part of it's equity. So the IRS and Congress said, we're going to tax part of this because it's not really all your money that's making money. So we're going to tax you. But they only did that for IRAs. They exempted the EQRP and 401ks and pensions because, quite frankly, they had better lobbyists. IRA companies apparently didn't know how to hire the right lobbyists. And so they did not get the exemption, just kind of how it works in DC.
Okay. Wow. That's fascinating. Sounds like the IRA companies need to hire better lobbyists.
Yeah, they're thinking, oh boy, this is, and like right now they're doing the Texas two-step, trying to get people to ignore the fact that this is there or that it's not that big of a deal. Every time I see somebody come in and they're like, yeah, I just paid a $60,000 or $100,000 tax bill, my IRA company didn't tell me. I'm like, I'm pretty sure it is a big deal to you. And they go, yeah, I wish they would have told me, but they're not required to. And so they just ignore it because they don't want people to leave, which they're doing now that they realize that they need to go somewhere that doesn't have the UBIT tax.
Okay. That makes perfect sense. So now explain how I can take my IRA and move it into an EQRP and not get hit with a tax bill.
So when you do a rollover, anytime you do a rollover, either directly or indirectly, you can move cash from an IRA or a 401k or assets. Like if you have, let's say you had $50,000 in your IRA and you had an apartment syndication, you can move all those through a rollover into an EQRP. It's a non-taxable, non-penalized event. And so most people do this. They have a 401k at a job and they end up leaving the job and then they roll it into an IRA. That's not a taxable event. So these are all rollovers. Right. And all you're doing here is actually rolling it into an EQRP. So no tax, no penalty. And all of a sudden you have control.
Got it. Okay. So these act like 401ks, or they're structured exactly the same? Like, can I take a loan from it just like you can a 401k and those kinds of things as well?
You can. Yeah. It's built under the 401k section of the tax code. So you have the same options there. You just have all the options. So that's one of the differences. People will say, well, is this just a 401k? And like the 401k is the umbrella for all plans, and every plan is written different. They give you different options when you can take the money out, whether you can do in-service rollovers, $50,000 loans. There's all sorts of different, it's the fine print. And so the EQRP is a type of 401k, and it just gives you more options than any other plan in the country.
So I guess my question would be, why would people still have IRAs if you have this option?
Generally because they don't know. So IRAs are simple for people to get into. Oftentimes they say, well, I can get this IRA and it's free. And then they get feed to death and they're controlled to death. But it's an easy sell up front because people can say, oh, look, it's only $50 to set up or it's zero. and we're just more transparent. So, there's an actual appropriate cost to set it up depending on the size, whether you're by yourself or with employees. And then you actually get command and control, and the average business saves about $30,000 a year on fees with
Wow.
an EQRP. I mean, that's just pure net bottom line cash into the owner's pocket. And they just don't know. So when people see this and they do the math, it's so obvious that the switches happen. There's rarely does anybody stay where they are unless they hate their money. And then why are you in business? Who knows?
Yeah. Cause when I was in the corporate world, I was a stockbroker, and, it was through principal, and it actually is still there, ironically, but, we had three options, right? You have a safe option, you have a medium option, then you have like full speculation. It's like all international stuff, but that's as much control as you have, you get A, B, or C. But what you're saying is that entire companies, corporations can come to EQRP, and all their employees' plans and everything are there.
Yeah, everything can be moved over. And then you still have required by law, any 401k has to have these options for employees. You have to have what you described, the safe, the A, B, C, D of mutual funds. Those are required. And so those are available, and all the other options that you can even dream up, coffee farms in Panama, like really anything you wanted, apartments, self-storage, private equity, startup companies, everything that you can imagine. Basically how the rich get richer is what you're now able to access. And it's just that those aren't available for most people because the whole third-party administrator and the Wall Street system is geared to keep your stuff in paper and keep stuck on their balance sheet so that they can AUM you to death.
Yeah. Wow. That's incredible. Okay. So that makes perfect sense. So this might be a silly question, but do you take these EQRP, clients that you have, and then do you ever use them as have them as investors in any of your deals, or is that just, you keep all of that separate?
They're separate. So the company is sets up the plans. The company doesn't set up any investments. It's just strictly setting up plans. And so people can invest, and they invest all over the place. We personally, I have some funds that I'm invested, that I create with my partner, and it's a separate company. We do things isolated. Some people use their retirement accounts. A lot of people use their personal money. So, but they're definitely different. EQRP is simply a plan creator and support system. So it does it really well. I mean, it's funny. You look at some of these companies out there, and more companies are trying to be the everything to everybody. And I laugh, and I'm like, okay, so you do everything, but you do it all crappy. And we do one thing, and we're the best at what we do.
Awesome. I love that. That's incredible. So kind of talk about now on more of the investment side personally, what are some of the things that the asset classes that you like in the markets?
Well, I mean, there's a couple of things that I really like. I like things that I understand, that are real, and I like things that are very future forward thinking technologically. I think it was Mark Andreessen said software is going to eat the world. And so like one of the funds that we were involved with, that we've raised $150 million for, is buying software. It's business to business software, and taking those companies. We know that it's just software is running everything, and AI is being built into that. So software is building its own software. And so we like stuff like that. We like the crypto space because our financial system is going to be completely overhauled this decade. There's no doubt we're entering Bretton Woods 3, like we're the Great Reset. All these different terms really come down to one thing. Our monetary system is changing. And so I like being in the middle of that versus waiting to see what happens, because it's going to run over people that wait to see what happens. And then I like stuff you can touch. So whether it's apartments or mini storage or gold or any type of construction, like most people have heard that there was a housing shortage in America. It's like 4 million units we're behind. And what most people don't realize is back in 2008, when we had the Great Reset, or the Great Financial Meltdown, we lost 75% of the supply chain for building. Mm-hmm. And it didn't go away and then it's going to come back next year. Like it takes years and years and years for that to rebuild. So there's constant pressure with all the demand of people. There's just not the supply. So I like that because it's very sustainable. People aren't just going to go away. They're still going to need housing. They're still going to buy crap on Amazon, which means they're going to need more self-storage. Like there's certain things that are fairly predictable. And I look at anything that I'm going to invest in, that it has to be at least a 4-year outlook where I'm good with it. If I'm trying to time something within a year or two, I just skip it because I'm not that good. And markets are weird. And they're like, there's a quote that things can be, the the market can remain irrational longer than I can remain liquid. That is true. I've had that experience. So I'm looking at things. Is this sustainable for me for the next 4+ years? Is it an asset I want to be in for more than 4 years? And when it is, then I'm interested.
Awesome. I love that. And that's obviously, you just described one thing that's so important is diversification, right? Because there's ebbs and flow in the market, and some asset classes are doing great. Like right now, I think on a whole, and you can correct me if I'm wrong, but in terms of just pure asset class to asset class, I believe that self-storage is outperforming multifamily.
Right now, I believe that that's true. Multifamily had a huge surge, but then with cap rate compression and just the surge in prices, you've seen more money going towards self storage, and part of that is a reflection of it just being hot, and you have massive piles of money in pension funds and private equity that's chasing anything. And when you can start going, you're looking at multifamily saying, well, how are we going to make money here? Because you see cap rates in multifamily right at the bottom, like super low single digits. And self storage is starting to move in that direction too. So I see a lot of people doing a lot of dumb things where I look at their cap, their deck, and I go, you're literally at a cap of 3, and you think it's going to go to 2. Like that's their plan. And so sometimes, especially at this phase of the market, I'm way conservative and really hesitant about a lot of the deals out there, because you have a lot of brand new people that think prices go nowhere but up. And that is incredibly dangerous, especially when you have rates going up like that. It changes. I mean, you think about housing and multifamily and every other big asset class. One of the major drivers was that it's gone up because the rates have gone down. Well, now that's inverted. And if rates go up, naturally prices would go down. So I think we're bound to see that. And we've had the fastest rate increase in history that I'm aware of. In 3 months, we've seen a 40+% increase in rates for housing. And that's spilling over across all the different markets and asset classes. So I think we have to be really mindful and cautious, because I think a bunch of people are going to get caught and they're not going to be able to service their debt. They're going to be going, oh man, I probably shouldn't have done that variable. And so, we've got problems coming and people need to be aware of it. But unfortunately, most people have not been investing for 15 or 20 years. Most of them, this is their first decade. And all we've seen is a straight up arrow.
Yeah, if you started as an operator 3 years ago, your investors are like, wow, yeah, I'm investing with the best operator. And it's like, yeah, well, you could trip and fall and 2x your investors' money.
Yeah.
But now that's changing, like you said. So it's something to keep an eye on. Like you mentioned, that's the thing that scares me is some of the debt that people are taking on. And, even like not being conservative in their underwriting, like, writing in 10% rent increases. And sure, some markets, you might get away with that for another year, but at some point something has to give. And if you're not, like you said, in that 3 to 5 hold period, prepared to go 5 if you need to, then you're going to be in trouble.
Yeah. I think that having a longer term outlook, and one of the things I've noticed is that people have a very short term outlook, and they get excited. And if your whole world is about a 3 to 5 year period, and then your deal is going to be out, I think one of the problems is you don't really learn anything. And investors that are in deals as passive investors, not a bad thing unless you don't learn anything, because on the other side, you have more cash, but you don't have any more skills. And so it's like, I've had a lot of people come to me over the years. I remember one conversation, this couple came and they said, we've got about $2 million. We're 55 and we have no idea what to do. And we don't have time to start over. So they're afraid. They're playing defense. They're playing not to lose. And I said, okay, well, what's the concern? Well, we watch the stock market. It goes up, it goes down. We have no idea. We're richer, we're poorer. They didn't have any skills. They accidentally just bumbled their way into a couple million. And it's not that hard over 30 years to bumble your way into a couple $1,000,000.
Right.
The problem is you have no idea what you're doing at that point, and you don't have time to recreate it. So I think being a completely passive investor is not the right approach. I think it's really helpful to learn and get yourself in the game, because you don't want to wake up in 5 years, have twice as much cash and be scared to death and no options and no intelligence.
Absolutely. Especially now with what interest rate just hit 8.5%. And that's just what they're telling us. It's probably closer to 10 to 12%. So, if you're sitting on $2 million of cash, you're literally just burning. So when an investor like that approaches you, what are kind of some of the steps that you take to help educate them?
I mean, what's challenging is that I'll ask somebody what they want. and figuring out their blueprint and their map. I mean, a big part of that is the education, and not just saying, well, here's some things you can do. You mentioned diversification, and that's helpful. It doesn't really matter though if we say, okay, we'll have a little bit of this and that and have a buffet of investments. If somebody doesn't understand anything about investments, so I'm always asking, are you interested in actually getting stronger? I'll help you get confidence, but that means you're going to have to invest time. I don't think most of the population wants to spend any time. They want to be told what to do. And those people that want to be told what to do are probably not listening or watching us. The people that are here are thinking, okay, I want to learn, I want to get better. And so I basically will say, look, start listening to the right people, show up at the right conferences, and here's some of the books to read. But the reality is you got to get out in the field. Like this is not something you do. It's kind of like, okay, you can be a passive investor, and yeah, it might work out, but it's like same thing with if you have a relationship. You ever tried to have passive sex with your partner and the marriage lasts? Like it goes away because your partner's like, what? You're just laying here. And so, you got to participate. Like you got to get involved.
Oh my God. Yes, you nailed that.
I mean, that's the point. Either nail it or it's going to go away.
Relationship therapy, compliments of Damion Lupo.
That's right, man. Don't be a passive relationship person. That's not good.
I love it. No, you really did nail it right on the head there. It's so true. So for those that do want to be told what to do, obviously we have to be careful unless we're licensed to not, give advice. So do you kind of point them in the right direction, or, how do you, I guess, communicate with those type of investors?
When somebody says, what do I do? I say, well, I start asking questions. And what I'll do is I'll use Tony Robbins, his documentary, I Am Not Your Guru. And so the way I look at things, I look at everybody as their own guru. I think the problem is people don't know what question to ask. Yes. And if I ask somebody a great question, and then I say, you are smart enough to make the decision, that's great. But what unfortunately people are trained to ask somebody to tell them the answer. And I don't think I need to tell anybody the answer. I think I need to ask a great question. So that's a hell of a lot harder because there's not really a script for the best questions because you got to listen to people. And what advisors do is they have a script of all the crap that they're selling from their institution. And then they say, this is what you should have. It's a 40-60 split between bonds and stocks and cash and, all this. And that's just in their best interest. So I think is in anybody's best interest is people that can listen and ask great questions and then trust them to make great decisions. Nobody's going to care about their money. I'm not going to care about somebody's money more than they will. And so I trust people to make great decisions about their money. It takes time though. I mean, we're not trained. We're trained that we're too stupid. And you have to realize that you're not too stupid. I don't care if you have a third grade education. It's a matter of your commitment. And that's one of the things, Johnny, that I've seen people do is they have coaches and mentors and they'll say, my coach wasn't very good, or my advisor wasn't very good. And I look at them and I go, well, who was doing the work? They're like, well, they didn't tell me the right. And I go, you are a victim, because the reality, a coach or a mentor that you're blaming means that you didn't take responsibility. If you think it cost too much or they didn't do the right thing, you didn't do the work. Right. And so this comes down to the person. And if you're willing to do the work, magic can happen.
Absolutely. That's so true. You nailed it right on the head. And really, it comes down to being taught, what to think, not how to think, but that's a story for another time. So you've written a lot of books. So give us maybe like your top 3 in order for, if people are listening and want to start learning, give us maybe top 3 or 4 that they can start with and get headed down the right road.
Well, I think one of the things people need to understand is that the tax code is set up as a series of incentives to get people to do certain behaviors. And so getting a copy of the QRP book, one of the books that I wrote, I just updated it in 2022. It's the 11th year anniversary. Getting a copy of that, and you can get that at qrpbook.com. And I'll send it to you. It's on me. There's no cost to you. Getting a copy of that and understanding that you can actually live tax-free for your life plus another 10 years beyond your life is interesting. And you can invest how you want to. Like when you understand that there's a tool that you should probably have, most people don't even realize that it's an option. So I'd say that's a great place to start, getting that one. There's a book that I've studied for years called Mastery by George Leonard, not the one by Robert Greene, but George Leonard. And anything that is great requires mastery. Meaning if you're going to be a great investor, if you're going to be a great parent, if you're going to be a great plumber, there's a focus on mastery, on doing the thing. So one of the things I heard somebody say yesterday, they said, well, so investing, it was actually one of my employees, And the comment was, so it's about diversification. I said, no, you start off with focus, and then you're not going to get rich diversifying. You're going to get rich focusing, just like Warren Buffett said, even though he's kind of a knucklehead with crypto. But Warren Buffett said, no, you focus on one thing and you protect that egg in your basket. And what most people do is they go, oh, I'm going to take 1,000 eggs. And I'm like, you're not getting anywhere. It's like the person that says, you ask, what do you do? And they go, well, I do a little Amway, and I've got a rental house, and I've got this lawn business, and I'm selling, Tupperware, and I've got a Mary Kay. You're like, you're terrible. What's the one thing that you're doing that you're going to spend 10,000 hours on, like Malcolm Gladwell talked about? So I really love the idea of picking the thing and then becoming a master in it, and then letting that be your launch pad for everything else.
I love that. It's so true, because so many people get, you hear, oh, the average millionaire has 7 streams of income. Yes, that's true. But he didn't start by doing 7 different ventures, focused on one venture, did one thing very well. And then you can branch out once you have the money to start diversifying.
Yeah. It's funny. I think it was Robert Allen had a book, Multiple Streams of Income, and different versions of that many years ago. And the average, so a millionaire right now is like that you need to be at 10 million. I think Grant Cardone ranted about this in one of his videos. And I was like, yeah, that's true. You need to be at 10 million. A million is BS. Like, it's not going to get you anywhere. And realistically, becoming a millionaire is not going to happen with multiple streams of income. You got to get to a million with one, and figure out how to have one stream that kicks you $1 million, and then go get another one. Because why is that important? If you have a stream that's 50 or 100,000 bucks, super easy, because you're definitely not a master. 50 or 100,000 doesn't mean crap. $1 million, you probably have systems, you have a business around it, you've got structures, you've got sustainability. So my suggestion is build pillars, 7-figure pillars. So each one is kicking off $1 million, and people are like, oh my God, that's ominous. No, do it one time and watch. It's like you buy one apartment, and then the next one is super easy. The first one is terrifying. Right. Same thing with a house. Like, oh my gosh, the first house I ever bought. But then the second one's like, oh yeah, I did that. I mean, I've bought a couple hundred houses, and most of them I never even saw. But I didn't do that with the first one. The first one I went to like 40 times before I closed, because I was so freaked out. I'm checking everything, and now I'm like, and you start moving past that. But that's starting with that first pillar. Figure out the first pillar, focus on it, and build yourself $1 million revenue stream. And that may be something that takes you 5 years. Guess how long it takes for the second $1 million one? A year or two. Like, you got to make sure that you get you're building the skill set, your personal muscle. That's what allows you to go get the second stream.
Absolutely. And you nailed it right on the head. It comes down to systems. And once you understand systems, listen, whether you're in real estate, e-commerce, crypto, everything is systematic, and those are universal and can be applied to any field. And once you have those in place, you're off and rolling. And like you said, first one might take 5-10 years. And then after that, it's, cut in half at least.
Yep. There's an amazing thing that happens, and most people end up on the 1 yard line, and then they switch directions and they go back the other direction. I'm like, what are you doing? Like, no, the end zone's the other way. Like, no, you're actually on the edge of it, and people switch. It's one of the most frustrating things to see people, and they get bored. We're in a very, we're like a bunch of drunk squirrels chasing shiny nuts. And I'm like, what are you doing, man? You're all over the place. And what happens is, if you ever see an animal that's chasing another animal, like, they have to pick one animal to go chase and eat. If they try to chase all of them, they end up starving to death. And that's what most people are doing. They're chasing everything they see. And right now we're seeing more things running and flying and flocking and spinning and tweeting and everything in every direction. And it's exhausting. And then we starve. And so that's, you got to like turn off the noise, focus on the thing, and then go eat it.
Yep. It's so true. I mean, so I'm a duck hunter, and if ever a big flock of birds comes in and you just stand up and just shoot at the flock, I can't tell you how many times I haven't knocked a single bird down. But if you pick one, I'm talking, 20 birds in your face, and you pick one, the amount of times that I've been able to shoot 3 by one at a time is, speaks for itself. So same thing. I love that. Well, we are coming up against time. I do have 5 questions that I ask all of my guests. It's the final 5. First question is, what's the best advice you've gotten from a mentor?
Fail faster and stop worrying about being eaten by anything. The failures are what gives you strength, power, control, and the ability to write your future.
I love that. So true. What is it about your career that makes you feel like you're fulfilling your why?
Every time I see one of my employees or one of the tribe show up and go, wow, you changed my life. That's me shifting from money to purpose, and the purpose is lifting people up. So it's those little nudges the universe is saying you're on track.
I love that. That's awesome. What's your favorite non-real estate or investment related book?
Non-real estate book. I was a big Tom Clancy guy when he
Nice.
used to write him before he died. And that's how I found Jamaica Blue Mountain Coffee and all sorts of other weird things. So I like that kind of stuff. And I actually wish that Harrison Ford would run for president after seeing him in some of these movies. I don't think that's going to happen, but I always thought, boy, if we could have the perfect ideal president, that's the guy.
I love that. That's so true. If you could have any superpower, what would it be?
Somehow I'm going to figure out how to fly. And
Yes.
there's something about that. I keep dreaming about it. Literally, I have these dreams where I'm levitating. And so eventually I'm going to figure out how to use some shamanism or something to levitate and float around. But I think that's one of the coolest superpowers. I don't know why. I'm sure being invisible would be cool, and being able to burn things with your eyes through, with firing through the walls. There's something about flying. And maybe that's because I've had such terrible experiences with TSA. I just want to be able to fly myself and lift off, instead of being groped by these pedophiles at security. But that's just a different story probably.
What is it about TSA? They have a vendetta against every single person they come across. Like, I didn't make you choose the worst job ever. So
There's so much negativity because everybody's pissed off about this process, and it's like you're being radiated and groped. And then, they're dealing. I think if you're around that much negativity, everything spills over. Like, it's like the 5 people we spend all our time with, we become those 5 people. Well, if you're dealing with negative people 8-10 hours a day, 5 days a week, you're going to become pretty much toxic.
yeah, it's so true. And like, I don't understand. We can fly a drone from halfway across the world and drop bombs, but I need to take my shoes off. Like, come on, really?
Yeah. Well, welcome to the security industrial complex.
And water. I was watching a stand-up. I can't remember. Oh, it was Hannibal Buress. If you know who he is, if you watch stand-up, and he's like, it must be so easy to get cocaine onto an airplane, but you want to bring a water bottle? Nope. That's a strip search.
Yeah, I think everything is upside down. Security is upside down. The markets don't make any sense. It's like basically we've turned off gravity.
I know, it's unbelievable. And we're all just floating through trying to figure it out.
Mm-hmm.
Cool. What's the best way for people to get a hold of you and learn more?
Best thing to do is to reach me on and get a copy of the QRP book. It gives you that's the focus of what I do. And if you want to listen to me some more, Financial Underdogs, my podcast is a great place to hear my commentary. It's mostly me talking about my perspective on the markets and investing and the lies we're being told and fake news and Elon buying Twitter and like all the other stuff that is out there that's relevant. And it's not a mutual fund spin. It's not a pharma spin, which is what you really get when you're looking at mainstream stuff, because they're bought and paid for by Wall Street and by pharma.
Yeah, it's so true. I mean, we could do a whole podcast on that, but who do you think funds medical schools?
Yeah.
Yeah, exactly. So just remember that next time, and be careful out there, folks. But Damion, thank you so much. This has been amazing. I appreciate your time.
Thanks, John. I appreciate you having me.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.